no doubt being helped by some of the bullish comments out from NVIDIA's CEO as well, Jensen Huang, talking about the fact that they need more chips coming from TSMC. Now, we did have some sales numbers out of that company just overnight as well. 16.9% for October, which is the slowest sales growth in more than 18 months, but almost 17% growth is still nothing to scoff at.
Yeah, and these comments obviously on the back of Jensen really trying to thread the needle when it comes to China relations as well as U.S. relations, but he obviously talked to some executives from Taiwan Semi and really talking about the fact that growth for AI is continuing to accelerate on a month-over-month basis, and they're going to need to have more chips being produced by Taiwan Semiconductor, and that's obviously giving not only just that bullish tone when it comes to the tech space, but also when you're looking at the memory names, the Western Digitals of the world, Microns. They really did not see a pullback last week. Those are companies that have been valued pretty cheaply compared to maybe some others in the space, and it continues to be a catch-up trade that a lot of traders really do appreciate, at least at this point in time. And we are not seeing it when it comes to the fundamentals of a lot of these companies, especially when you're looking at the mega cap names. They're still spending on capex. That should also obviously increase demand when it comes to NVIDIA, and that also should translate to Taiwan Semiconductor as well. But if you even take the AI trade out of it, are we seeing maybe a refresh cycle when it comes to consumer handheld devices, the Apples of the world, the iPhones, things of that nature? And if that is also taking place, that's actually a margin driver for Taiwan Semi. That's where they make the bulk of their money when you're looking at profitability. And that also could be a tailwind for them over the next year or 2 years. So this is a company that's been able to perform. They obviously have a little bit of a monopoly in this market. And the comments that we heard from Jensen over the weekend here is just a testament to their stability, if you will, when it comes to the overall AI trade.
And you mentioned some of those memory names as well, KG. I mean, I'm just looking at a chart of SanDisk, for instance, which has had a price target boost out from Barclays this morning. I mean, $220 from 39. That's a significant jump. I mean, this stock is up over 600% year to date. And, I was just looking at the Asia performance as well. You had names like Samsung, SK Hynix, Kioxia up 11% over in Japanese trade as well, one of the biggest movers on the Nikkei. So, I mean, these have really been on a tear lately off the back of this whole idea that, as you mentioned, this AI hype and boom, the massive capex that we're seeing is going to fuel that demand for the memory, and that's leading to tightening supply and also higher prices. I'm actually seeing that Seagate, according to one report, I should say SanDisk, has actually upped its prices on NAND as well. So talk to us about this trade.
Yeah, so the memory business, if you're looking at it over the long term, it's very cyclical in nature. And what we actually have seen over the last 5 years or so is a glut of inventory for a lot of their customers, and that's what's actually was pushing prices down for a lot of these memory providers. But now you're starting to see high bandwidth coming into the ecosystem for artificial intelligence, and a lot of these data center providers and builders are seeing that the more memory you provide, actually more efficient your data center is going to be, more efficient your models are going to be, and that's why they're catching a bid. But also, if you're talking about a lot of these names, SanDisk, Western Digital, Micron, these are names that were heavily shorted over the last 2 years as well. So not only do you have that fundamental picture that's starting to kind of pick up steam and pick up a little bit of momentum when it comes to demand, but you're also getting that short covering squeeze taking place as well. Maybe a little bit of unification, if you will. I hate kind of using that term, but you are seeing a lot of traders starting to pile into these options in order to try to squeeze prices higher. So at the end of the day, over the long term, Sam, as you know and I know, memory is still cyclical, but for now, there's an intermediate demand that is taking place here, and a lot of these companies are benefiting from that.
Yeah, and it's interesting. I was listening to one report actually out from the South China Morning Post as well, that up the road in Shenzhen, there is a major electronics sort of type of wholesale market. I don't know if you've been there or at least seen documentaries about it. I know that a lot of the videos from there go viral because they sort of pull apart gadgets and stuff. And they were saying how the memory prices at that particular place was actually going up. And so they're thinking maybe the memory products could lead to high consumer electronics products as well, which is certainly an interesting story, I think, to track. But as you say, cyclical in nature, and there's some other technical factors going on here as well. Just switching gears from the chips to the commodities, what are you seeing as far as that space this morning? Because I know there was a lot of sort of moving parts for the energy space last week. What stands out to you this morning, KG?
Yeah, a lot when you're looking at the commodity space. I think the first one that I'm focusing on is natural gas. It actually hit $4.50, but now it actually has moved to the downside fairly aggressively. I believe we actually looked at this chart on Wednesday or Tuesday of last week, Sam, but you are starting to see that fade for natural gas. A little bit more overvalued when you're looking at the demand picture as well as the supply picture. You are also seeing a little bit of a reversal when it comes to crude oil. And then when you're looking at the metal space, metals are catching a bit. Gold hitting the 20-day moving average right now, trying to potentially recapture new all-time highs here over the next couple of weeks or so. Let's see if that's going to take place. Silver also up around 3%. Silver is now considered to be a critical metal, so that is going to be something that could actually spark some demand from the government standpoint, maybe some subsidies when it comes to a lot of these miners, the copper miners, gold miners, silver miners, and things of that nature here. And you are seeing that catch a bid. So when you're looking at the risk-on nature of this market so far for the equities, and you're seeing that correlate to silver moving higher, that does mean that obviously we are getting some optimism, at least for now, and maybe some short covering taking place here. And if we are going to see this dynamic where the government reopens, we do have the Fed that's going to be a little bit more favorable when it comes to rate cuts over the near and long term. That could keep inflation relatively high. Hard assets, especially on the commodity front, generally perform pretty well in a high inflationary environment or even sticky inflationary environment. So that could be a situation where that becomes an opportunity for investors and traders in 2026.
Okay, and obviously we also have the US dollar taking a little bit of a breather this morning too. Fun fact, the S&P did close higher each of the last 9 Mondays, according to Jay Woods. I don't remember what I had for breakfast, let alone what happened every Monday for the last 9 weeks, so I'm going to take his word for it. But we've had over 90% of the S&P reporting so far. We've got some big names coming up for us this week as well. But what are you watching as far as those levels on the S&P 500, KG?
Yeah, so the upside, I'm actually still looking at this 6830-ish area as your major area of resistance. If we're looking at the E-mini S&P 500 futures, and I think this is going to be actually a really decent chart for us to kind of talk about, well, we have something called an anchored volume-weighted average price, or anchored VWAP, that people actually kind of talk about. If we look at those highs back on around the 28th or so, and you have this anchored volume-weighted average price, it's a moving average that also leverages volume in order to calculate this. We're pretty much hitting that area of resistance right now. So if you are a short, or if somebody is looking to short this market, this would be one of those short zones that you could see a pullback. Very hard to do, especially with that hammer candle. This one's a little bit more of a fly. But if you look at the S&P 500, it's a hammer candle. That was also a bullish signal. So right now we have a little bit of a battle taking place. What you would like to see if you're a bull is not only us advancing in the S&P 500, but that market breadth expansion that we saw on Thursday and Friday following through today and tomorrow. You don't really want to see that concentration risk happening again, especially leading up to NVIDIA earnings, which is going to be next week on Wednesday, if I'm not mistaken. So a pretty decent technical setup taking place. Let's see if we're going to be able to hold these levels. You want to see volatility crush below that 17 level. If you're a bull right now, it's still a little bit elevated here, but it's a good market in order to get some intraday plays in, because once again, volatility is still a little bit elevated given the market move that we're seeing.
Okay. KG, thanks so much for that. Really appreciate it as always. I'll chat to you a little bit later on. Coming up, we will take a closer look at the bigger picture with the government shutdown potentially ending soon. Morning Trade Live will be right back after this.
Coldest at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at SchwabNetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Curious about how companies are performing heading into quarterly earnings, or how the macro environment is influencing the markets, or even specific sector performance and how they're faring? Connect with me on social at Marley Caden.
No, not right now. I think yesterday.
Believe me, when it comes to investing, you'll love Carl's way. Take a left here, please. Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No,
Can do.
I'll get out there.
Where are you going?
Yesterday,
Schwab.
I was talking about it with somebody.
Schwab, a modern approach to wealth management.
I was telling James.
Opportunities don't stop when the market day ends. So neither do
My
we.
other person about it. My
Schwab
other
gives you
client.
round-the-clock access to over 1,100
I can't
most
look at it right
popular
now.
stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
It should be a new referral system this time, though.
We're back on Morning Trade Live. Coinbase is
They should have
announcing
switched the
a new
thing up.
platform for digital coin offerings. The platform will allow individual investors the opportunity to purchase tokens before they are listed on its exchange. Coinbase had a similar offering in 2017 and 2018 before prices plunged. Let's take a look at the winners and the losers on the session so far to kickstart this fresh trading week. And we do have balance here. Shares soaring today, 7.5% higher. Micron also off to the races today, 6.5% up. Lovin is doing a similar thing, and Eli Lilly is up 5.5%. There's been a lot of news regarding Pfizer in this space, as well as some of the other developments around the healthcare sector as well this morning. So there are your winners for this Monday. Let's take a look at the laggards, and we do have Centene down 7.5%. As we said, we're going to get you across some of these healthcare insurers just in a little while with Marley Caden as to what is behind some of this weakness today. Molina Healthcare also tracking lower by 4.3%. So we're seeing a bit of a trend across the healthcare space as well as to some of this underperformance in the market for this trading day. Joining us now is Kathy Jones, Chief Fixed Income Strategist at Schwab Center for Financial Research. Thanks so much for joining us for this Monday, Kathy. So obviously we're tracking these developments around the potential for this end to the government shutdown. Now, what are you seeing as far as the reaction
we have
to
to wait
fixed
for them
income
to
today?
give us the money, though. Everything is done correctly.
Because ending the shutdown means you pick up in economic activity. Some of the things that haven't been available to do will now be available to do, and such as flying, without having to worry too much over the Thanksgiving holiday. So I think that also gets workers back to work and gets their paychecks flowing again. So the prospect is for a little bit of a pop in growth. that might not have otherwise occurred. So starting to see yields move up a little bit.
Right, so I'm just looking at the 10-year, the benchmark at 410 right now. It seemed to be a bit of a push and pull scenario last week. I mean, all in all, weekly performance, it kind of feels like we're unchanged here, but we saw everything from 408 to 416 last week with respect to, you know, that tug of war between the good data, the bad data, the dovish comments, the hawkish comments. So what do you think is next now? Where do we go from here? And particularly if we do get the end to the government shutdown and we start to get this deluge of the official data.
Yeah, I think we'll have to take the early data points with a bit of a grain of salt because they haven't been out gathering the data. And if they rush to sort of pull it together in an incomplete fashion, they'll have to be a little bit cautious about what it means. But I do think the market is going to be in this push-pull scenario for a while until we get some clear-cut indication either that inflation is going to come down and that opens the doors to some more Fed rate cuts and it eases some of the upward pressure at the long end of the curve, or it's not coming down and job growth maybe firms up a little bit and that means the Fed's on hold longer. We're in the camp that says that we don't expect a rate cut in December. We think the decision on where to go on rates will be pushed into the first quarter when the Fed gets more data. And again, because inflation is sticking near that 3% area, I think most of the folks at the Fed want to be confident it's going to come down before initiating further rate cuts.
Okay, so they're perhaps likely, as far as you're concerned, and the team over there, to sit on their hands come December. Maybe just not enough information before that decision for us, and particularly if we get the shutdown this week and we start to get some data subsequently after that. Let's see what happens. I mean, the markets seem to be still looking towards that December cut, but they might have to wait and take a cautious approach. Where else are you seeing opportunity here in credit markets right now?
Yeah, credit markets, spreads are very tight. The yield you get versus treasuries in the investment grade and in the high yield markets pretty small, pretty low. And so with those spreads very tight, we still think the fundamentals for the investment grade part of the market are very good, and that's an opportunity with yields where they are to continue to lock in some of that income flow for the next, say, 5 to 10 years. So we like intermediate term. We like tips because, we think that they're priced in such a way that you can get a positive real return, likely over time. So for people concerned about inflation, I think tips make a lot of sense. Mortgage-backed securities, those look good. They give you essentially the same government backing as treasuries with a higher yield. So that's an area to consider as well for a pickup in yield. And then, one of our favorites continues to be municipal bonds, especially for people in high tax states and high tax brackets. Those tax equivalent yields are very attractive, and the credit quality is very high, generally speaking, in the investment grade
next
market.
day after that. I'm already
Always appreciate it. Thank you so much for joining me on this Monday. Chief Fixed Income Strategist at the Schwab Center for Financial Research joining me there. Let's keep the conversation going. We welcome in Ben Emmons now, founder and CIO, I should say, at Bedwatch Advisors. Thanks so much for joining us today, Ben. So you heard Kathy there. I mean, she thinks we could stand put in December, stand pat in December, and then go Q1. How are you looking at things now, given the more recent developments about the potential end for this government shutdown?
Hi, good morning, Sam. Well, we heard Daly this morning making language or saying language that normally New York Fed Williams says. He said that Fed policy is in a good place. And that's a really strong signal that they're thinking about more neutral stance at this point. And I think what happened was that although we didn't have official data, we did get a lot of private sector data out that looked relatively strong. Plus, there's inflation that they're concerned about. And I think what they did is to say, well, we cut rates the last time because we want to make sure the unemployment rate doesn't go up quickly, but we keep also our eyes on inflation, and that's where a lot of them are now, saying, we got to pay attention to inflation, and perhaps be on hold here for a meeting to see how this all plays out. Because, the reopening of the government will be like a small stimulus to the economy, so that in itself, too, is for them to be watched. So I think that's where they're at right now, being more neutral on both.
Yeah, it's interesting because Daly didn't really say whether she sort of favoured a rate cut or not come December. So that sort of leaves it a bit more open there. But something I saw that was a notable distinction in some of her commentary around the jobs market was that she's thinking about this being a situation where there is weaker demand rather than a supply issue caused by the immigration policy. Does that change the narrative as to how some have been sort of thinking about the labour market?
And it does, because, the immigration effect is somewhat mechanical, right? You get fewer people in and the labor force changes as a result, and that leads you to this higher unemployment rate. And I guess this mechanical demand, of course, is different. And it does play into that there are changes happening, not all related to AI, by the way, just related to the economy. Some companies don't see strength out there and have to adjust their workforce, or still sitting on, let's say, a fair amount of people that they had overhired perhaps during the pandemic phase, and now slowly are working that off. And we can obviously notice that this is happening in the technology sector, maybe some other sectors out there show the same. So I don't think it changes the narrative in itself, but it's a red flag that they obviously are watching. So as we're sitting here balanced and have neutral policy, what they seem to be indicating, it could shift again if this labor weakness is driven by demand, and that could then drive them again to quicker rate cuts. They feel they need to arrest that development.
What do you make of some of the other sort of Fed commentary that we've been hearing? Because, I mean, there's no surprises there that, there is a very divided Fed. And, I mean, the fact that we saw two dissents in sort of opposite direction very much speaks to that. But, as we start to unpack some of the remarks over the last course of the week or so, I mean, for instance, you've had Goolsbee talking about the cautious approach to further rate cuts, etc. What's really stood out to you as to, what they've been saying about this and where they sit on this trajectory of potential for more rate cuts to come?
Yeah, I think that point that Goolsbee was making of like the caution that we have, particularly because what Goolsbee actually was saying, like, okay, we got maybe demand issues here, but by and large, the labor market picture in aggregate doesn't show such inferior weakness that they have to slam the brakes, so to speak. They have to take emergency action to change the course of that development. And I think that stood out to me, that they're actually seeing, contrast to all the headlines that we're getting out there. Okay, AI is driving, displacing people and other negative effects on labor. That within the Fed is also a view like, well, it's actually not that bad, and therefore we don't have to take action here, which is another view to this neutral story that's underlying there. So I think if you take it all together, Sam, you got people that are focusing on inflation, people that are looking at this labor picture as being too weak. There's maybe a handful of others that are saying, no, we should stick with it. And I think that Stephen Myron is probably the most outlier in that way. But there's a few others that probably say, like, we can keep cutting, and they're like Waller. But it seems to be that the Fed overall is neutral on either side of its mandate, given that where the economy is right now.
Okay. Ben Emmons, always a pleasure. Thank you so much for joining us today. Your analysis and insight, always appreciate it. Founder and CIO, FedWatch Advisors there joining me. Coming up, more on the latest from Capitol Hill with Mike Townsend from Charles Schwab. Morning Trade Live. We'll be right back.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so...
Sometimes,
Next. Try it again?
You could have done better.
Please?
Same goes for where you invest. Level up and invest smarter with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in the team from Charles Schwab. We're joined now by Mike Townsend, Managing Director, Legislative and Regulatory Affairs, Charles Schwab. All right, very good morning to you, Mike. So day 41, it looks like we've got light at the end of the tunnel. What do you make of it?
Well, hi, Sam. It's great to be with you. Yeah, after all these weeks, we finally look like we have a deal. The Senate struck a deal late last night and passed a procedural vote to get going. So the key elements of the deal are that it would
government
reform the
shutdown
government and
is
fund
ending.
government operations through January 30th of 2026. So
Hey,
essentially,
look at the end
buys
of government
Congress 2.5 more months to try to get things done. It would also include passing 3 of the 12 appropriations bills that fund the government. That's why we're in the shutdown, is because they haven't passed these appropriations bills to fund everything. So these appropriations bills would include agriculture, which is really important because that has the SNAP benefits, the food assistance benefits for about 42 million Americans that have been in limbo over the last couple of weeks. It would also fund military construction and veterans programs, and then the legislative branch. So that's really important. And then there's also some provisions in there to make sure that the administration can't fire federal employees between now and January 30th. It would reinstate federal employees who were fired earlier in the shutdown, and it would ensure that all federal employees get back pay. So it's a lot of progress, but Sam, the big thing that it does not include is anything to extend those expiring health care subsidies, which has really been, for a lot of Democrats, the kind of line in the sand. So as you might imagine, there are a lot of upset Democrats, there are a lot of upset Republicans, and usually in Washington, when everyone is mad, that's the sign that a compromise is on the way.
Yeah, absolutely. And it's been interesting because, a lot of people have just been wondering, just how uncomfortable things need to get before we sort of see a move or at least a development like this where the two sides sort of come together and try to hammer something out, because there had been a lot of conversations that I was having with guests last week about the fact that, last time around it was really the travel disruptions that became the tipping point. And here we were come Friday where we were seeing a lot of flights being cancelled, and I'm sure everybody knows someone who was put out over the weekend, by some of the travel plans and cancellations, etc., and delays. So, here we are come this Monday. So what happens next, Mike? Just talk us through sort of the process here so we can get a better understanding, so that obviously, investors can get a sense of, how the markets are perhaps likely to react to this.
Sure, and let me first say, Sam, I agree with you 100% that it was the air travel delays was really the important catalyst here. I think everybody on Capitol Hill realized that this was impacting more and more people, and frankly, they could not go into the Thanksgiving holiday with this kind of situation. So I think that's what did spur the agreement. But, what's next here is, normally it would take 2, 3, 4 days for the Senate to kind of go through all the procedural process in order to get this passed. There is an attempt today to try to expedite that, to even vote on it as soon as the end of today, sometime late this evening. You would need all 100 senators to agree to that expedited process, and I'm not sure whether that can happen, but that's what is being attempted. But whenever it passes the Senate, so whether that's late today or maybe midweek, then the House of Representatives has to come back into town. They've been out of town since September 19th, and they would have to reconvene, and then they would have to vote on it. And of course, finally, the president would have to sign it into law. So I think the most likely timing is probably Thursday or Friday. I would say Wednesday would be the earliest, but I think Thursday or Friday is the more likely timing for this. And look, I think the market will be happy with this resolution. I don't think the market has been really affected by the shutdown so far, but you can't see this as anything but a positive development.
Yeah, and then the big next question is, of course, when do some of the air traffic controllers actually get back to work? I mean, Sean Duffy has been indicating that it wouldn't be straight away, but then I heard this morning it could just be a matter of days. So that's obviously something to keep tabs on as well. Mike, always a pleasure to talk to you. Thank you so much for your time today. Mike Townsend, Managing Director, Legislative and Regulatory Affairs over at Charles Schwab. Appreciate your time. Well, coming up, it's time for the morning trade, and we'll take a closer look. Get your words out at the weakness today for health insurance stocks after the president's comments on the industry. Morning Trade Live. We'll be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
We're back on Morning Trade Live. We're watching health insurance stocks this morning after President Trump ripped the industry on Truth Social. Names like Centene, HCA, Molina and Elevance are all lower this morning. Health insurance subsidies have been one of the biggest issues at the center of the government shutdown. Take a look at these names, all getting hit in the session to the tune of 2.5% to 8.5% this morning. So health insurance stocks are the focus of the morning trade. Joining us now for a closer look at that is Schwab Network's host, Marley Caden. What exactly, Marley, did the president say on Truth Social, and what do you make of the move in these stocks going lower today as a result of that? What does it tell you?
Yes, Sam, as you mentioned, the sticking point on this government shutdown and passing some funding to end the impasse is these subsidies. So let's walk through sort of what some of the issues are, what Trump said, and also what these subsidies are, because I think we're not discussing that as much as we should be too. So you said shares of the health insurers with plans under the Affordable Care Act, also known as Obamacare, are falling today, some of which very significantly after President Trump said federal funds subsidizing those plans must be directed back to Americans who are actually buying the coverage. So those subsidies at the heart of this federal shutdown, they're due to expire at the end of the year. They were introduced during the pandemic to help lower income Americans pay for private health insurance. So these plans, Obamacare plans, are subsidized by the government based on income. They also include a risk adjustment pool that reimburses insurers covering a disproportionate share of sicker members who are using these subsidies. So the insurance companies are getting paid back because of these subsidies. These subsidies have enabled enrollment to double to 24 million people since they were put in place back in 2021. But President Trump came out on Truth Social and said, quote, "The money must now go directly to the people, taking the fat cat insurance companies out of the corrupt system of healthcare. The people can buy their own much better policy for much less money, saving for themselves an absolute fortune." Then he added, "Pay the people, not the insurance company." He had a separate quote saying that the proposed hundreds of billions of dollars that are being subsidized would be directed towards people and not towards the big bad insurance companies, as he said. And these allocated funds, as Trump is saying on Truth Social, would enable these individuals to then buy their own superior healthcare services, in his opinion, and retain those additional savings. Now, because of the potential of these subsidies ending, the potential to be giving that money directly to people to spend as they please, intended to be for this insurance coverage, but no guarantee that's what it goes to, we are seeing some big moves. The biggest moves we're seeing, Oscar Health. Health down 3%, Molina Healthcare down 5%. So a big potential hit to the bottom line for these companies, Sam.
Yeah, it doesn't look like many are immune to what we're seeing as far as these headlines are concerned. Thanks so much for getting us across the details of those developments, Marley Caden. Let's trade it now. United Health in particular with Charles Moon, stock strategist, Prosper Trading Academy. How are you approaching your example trade for UNH, Charles?
Yeah, this is one obviously that's attributed or tied a lot to this government shutdown, with the ACA being kind of the sticking point as far as the Democrats wanting this in terms of inclusion on the deal. From a technical standpoint, UNH has actually held up relatively well versus their peers. They hit a technical support level, which was a pretty nice little gap fill, but that's the question. If we get underneath that price, which is 314, I could see UNH really racing down to 300 to 290 as well. If it could break above 325, I think the breakout. Along the 290 puts, I think you can get this at around 375. It's probably trading a little bit lower. I'd only give this around 7 days time, because we don't want to get nicked up by theta. So, ultimately, I expect this move to take place relatively soon, and I think that this could reach to a fairly easy 50% gains once the stock breaks out into a direction. So above 325 or below 314, I feel those are the tipping points for this stock in the near term.
Okay, and UNH not suffering as deep losses, suffice to say, as some of the other names in trade today, just down around 0.5% at 322 and change, but it is still under pressure as we have seen these developments from Trump. Thank you so much, Charles Moon. We have to leave it there. Stock strategist, Prosper Trading Academy. Appreciate your time. Coming up, we will take a closer look at the sectors on the move this morning and how the potential end to this U.S. government shutdown is impacting global markets as well.
Morning movers, be the first to find out what's shaping early market action. Check. Options Corner, Futures Focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Vardas, coming to you live from the floor of the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. So for that, I am joined by Kevin Hincks over in Chicago today. Thanks so much for your time, Kevin. So get us across what you're seeing out there. It looks like there's a couple of culprits doing the heavy lifting this morning, namely tech. Talk us through what you're seeing out there.